It's time for Wise Money with Korhorn Financial Group with certified financial planners Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of the Wise Money Show with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. Thanks for being here, friends. My name is Mike Bernard. I'm your host. I'm also one of the certified financial planners on the program. With me in the KFG studio is my business partner and fellow CFP, Kevin Korhorn. Special guest, Corey Johnson.
If you own, run, or work in a small business, running your retirement plan is not easy. There are 5 major challenges every business faces with their retirement plan. And on today's show, we're sharing what those are and how you can overcome them. That and more on this hour of the Wise Money Show.
You ever get up and get dressed and then you're out in public and you look down and you're like, what is that stain on my shirt? I got a little bit of that going on today. We can all relate. All right, yeah, we're thankful for Corey and his wisdom. He's going to help us. If you like Kevin said, you run a small business, you own a small business, or you work in a small business, you've got a retirement plan, you want to make sure it's great. We're helping you overcome those challenges today. If you have questions for the program or need any help with your 401k, we are here for you. You can call or text 574-222-2000. That's 574-222-2000. Online, wisemoneyshow.com is where you can find us and connect with us that way, or all over social media, wherever you're at. We are there as well. Just search The Wise Money Show. Welcome back, Corey. Thanks for being here. Corey's one of our retirement plan experts, and he and his team have actually been providing tons of relief to businesses in our community, essentially by helping overcome the challenges we're going to be talking about today. And so we're grateful that he's going to share some of that wisdom with us. Now, the Wise Money Show is a show about financial planning, and we're going to focus a lot on investment planning and tax planning and retirement planning today. But if you run or own a small business or work in one and have a 401k, this show is for you. Guys, before we get into the obstacles and the challenges that people need to overcome, as we're talking to small business owners or people that run a small business, what are they looking for in their 401k? What are they wanting?
Well, I think most business owners agree that a 401k is a wanted or almost needed benefit to help retain, and recruit employees. But the question is, how do we balance the different challenges of starting one, whether it be cost or administrative burden, and how do we make it a benefit to the employees, but also a benefit to the employer?
Right. You don't want it to be this benefit, because I would agree with you. It seems like it is a must. It's needed. However, how do you make sure that it is a benefit to the employees and not a burden to you as the owner or to your executive team, leadership team?
Yeah, I think I've never felt it more acutely than throughout the kind of the coronavirus and things, the wave of, especially in the RV industry, when the RV industry made so many units and they were hiring anyone that they could, and restaurants were shutting down because their cooks were going to work in the RV business, and people could not seem to retain their employees. It's a couple of things. It's interesting to me because as a financial planner, I always think, well, you want the retirement plan because it's the most effective tool most people are going to have to accumulate wealth in their lifetime. So that's why you would want that. As an employer, some employers say, well, yes, that's fine, but it's just a the idea is I want to have a benefit, and so it's just part of my benefits, and I'm not thinking about participant outcomes. We are focused on participant outcomes,
yeah.
But it's strange. Sometimes that's missed by employers, and it makes sense, because if you're really good at making fill in the blank, making widgets or drilling wells or trimming trees or pouring concrete or whatever it is you may be doing, if you're really good at that, you might not spend a lot of time, pondering, hey, how does this work? These souls that are employed by me, how are they going to achieve their great goals in life? some employers do think at that level, and I think to me, one of the most enjoyable experiences I've had related to a retirement plan is we had a plan. There was 150 employees in this company, and they reached out to us because they wanted education for their employees. Mm-hmm. That was the main thing. Now I think, okay, I want the employees to stack it up like cordwood and get going towards a retirement plan. And they were just at the right place in the funnel, because I was way more on the effect end, and they're like, hey, we want the cause. And the cause, part of the cause was, hey, I want this for I want education for my employees to understand, but also I don't want my employees to see their 401k as a piggy bank, or to show up and say, well, I know I can only get my money out with a hardship withdrawal, so I got to come up with the hard enough hardship withdrawal story to be able to try and get my money out.
And just real quick with that story, that company, their employee participation rate, doubled as we started helping them and doing education and all that. You don't need to share exact figures, but it's pretty breathtaking if I'm remembering correctly. Yeah. So if I'm a participant, right, we're going to talk a lot about, administrative type things. But if I'm a participant, I want a good plan. Mm-hmm. I want a good plan. I want good investment choices. This one drives us nuts as financial planners. You're trying to help someone craft a good investment portfolio within their 401k, and you're missing essential ingredients.
Right.
My goodness, drives us crazy. Or when the cost is out of whack, or when you don't have some of the options and features. From a participant standpoint, just drives us bonkers. So, all right, that's a little banter. Let's get into it. Corey, you shared with me there's 5 major challenges every business faces with their 401k, with their retirement plan at work, and we're going to go through those. First one is cost. Okay, let's talk about that, and then how do you overcome it?
Yeah, this is probably the most popular one where business owners say, I can't start a 401k because it costs too much. And in today's world, there's really 2 ways you can run a retirement plan, thanks to Secure Act 1.0 and Secure Act 2.0. You can have a standalone retirement plan all by yourself, where you're really only leveraging your assets that the owner and the employees are putting into the plan. Or you can join what's called a pooled employer plan, a PEP, where you get to leverage the assets of a whole group of employers to help lower the costs and fees for everybody.
Yeah. So just how's that coffee, Kevin? Leveraging the asset. I mean, some of the costs are just flat. If you're going to have a plan, you need an audit. We're going to get to that. If you're going to have a plan, you've got certain layer fees. But then some of the others are percentage-based fees based on how much money's in the plan. And if it's just you, then you have a small amount, relatively speaking, of assets in the plan. But if you pool your 401k with others, and I want to get to that because that sounds almost, tricky to do, then there's more assets, and therefore you can get some break points on fees. So, Corey, speak into that a little bit.
Yeah, so the pooled employer plan, think you can now fall under a bucket or a chassis and attach to that chassis with a large amount of other employers, whether in your community or regionally or nationally. But what this does is now you are taking, instead of $100,000 as a startup plan, you can say, I'm going to have $50 million of assets to help talk with the record keepers and the administrators and saying, hey, we need lower fees because of how many assets we have inside the plan.
So if you're pooling your plan together, does that mean funds are commingled, or people don't have their own 401k or own 401k statement? Let's speak to that.
Oh, you sound like a business owner, Mike.
Yes,
That's
I do.
a great question. So no, the plans, and this is very important, all of the dollars are segregated. That's the role of the record keeper. And it's a very important role because you can get in big trouble if you don't get that right. So the big idea is a volume discount. You're bringing a volume of purchasing power to the table, and in doing so, and we're going to get into this a little bit later here, but there are certain things, certain burdens that are lifted from the employer, because most employers say, hey, I want to have a business and I want to do this thing. I don't want to have a second business, which means running a retirement plan. And I've seen it where it almost feels that cumbersome.
Yeah. Pooled employer plan, that changes the game with offering a 401k, a great 401k in your business for you and for your employees. So we're going to get into a couple of the other benefits there, how you can overcome this burden of cost. But then what are the other big challenges every business faces with their 401k? We've got that and more coming up on the Wise Money Show with Korhorn Financial Group. Hello, YouTube. Thanks for being here. This is the Wise Money Show. What you're watching right now is our weekly 1-hour talk show that airs right here on this channel, 10 a.m. Eastern time every Saturday morning. Also on podcast, by the way, at the same time, but also on a couple of local radio stations as well, which is why the content's broken up the way that it is with commercial breaks, blah, blah, blah. Yeah. Okay, but if you're looking for more content on how to take your next wise step in your financial life and apply to sort of current events and what's going on, hey, and if inflation's coming down, how should you structure your portfolio? What should you do? Do you do Roth conversions if you're in the 22% tax bracket? All those sorts of things and more. Make sure you hit that subscribe button, turn on notifications. We've dropped new content every single weekday right here on this channel. You're going to want to make sure that you catch that. If you like the content, leave comments below as well. We appreciate it. All right.
Okay, here we go.
We've got to hit definitely the plan audit. So pick it back up as far as like that purchasing power, that leverage, Kevin, that's the right phrase. Talk about plan audit, because I think that's a biggie.
Mm-hmm.
All right, here we go. What are the 5 challenges that every business faces when they're offering a 401k or retirement plan to their employees at work? What are they, and how can you overcome them? We're helping with that right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name's Mike Bernard. With me in the KFG studios, Kevin Korhorn, special guest Corey Johnson. Every episode of the Wise Money Show is on podcast. Wherever you're listening, search the Wise Money Show. Subscribe to or follow the program, and then rate the program as well. We appreciate that. We're talking about retirement plans, and there's been some new legislation over the past few years that has significantly changed your 401k. And if I'll say boldly, if you haven't revisited your 401k recently in the past 6 months with a retirement plan advisor, you need to. Things have changed. If you also are no longer, or you run a small business, own a small business, and you aren't offering a 401k or retirement plan at work, the game has changed. You need to sit down and talk to someone. First obstacle every small business faces is cost. And I remember, Kevin, when the team was much smaller, we had a simple IRA, we had a 401k, we switched back to simple. There's lots of reasons for that. But the cost as a small startup entrepreneurial business, it's a hurdle. Things have changed with the PEP that allows you to get a discount because of leveraging a bigger size. You also get to avoid some of the costly and frustrating parts of having a 401k, like a plan audit. Corey, what tell us about that?
Yeah, the plan audit, to say it lightly, is one of the more frustrating parts of having a 401k once you reach 100 employees. There's really no value to it other than the auditors get paid some money, and that can range from $10,000 to $15,000.
Yeah, I mean, the only value really would be confirming compliance, but you're not far off there.
Yeah,
it's an expensive, it's time consuming. There's the soft costs where you say somebody, whether it's my HR manager or whoever it is typically going to spend somewhere between 20 to 40 hours doing the behind-the-scenes work and organizing the data to get it to the right person and to the auditing firm. So it can be fairly time-consuming and costly, and that's where, as part of the pooled employer plan, because when we started, we did a startup plan for a company, and they had, I think close to 200 employees, and they had no assets in the plan, but right out of the gate, in year one, they're writing a check for almost $10,000 for the audit. And so they had to be very committed to the cause and the idea that, hey, we're going to do this. Because when you look at the expenses of a plan, the expenses of the plan can be borne by the employer or they can be borne by the employees. And typically, especially if you can get the cost down, we prefer, our kind of theology of plan costs is that the employer pays as much as they need to in the first 3 years, especially if it's a startup plan, to get the benefits that the government offers for starting a plan.
Well, so let's speak to that really, really quick, Corey. So that's Secure Act 2.0, and I know there's 5 challenges. We're still on the first one, but let's talk about some of the changes with Secure Act 2.0 with those startup costs.
Yeah, so if you're a startup company or a startup plan, I should say, Secure Act 2.0 is essentially saying that the taxpayers are going to pay for the first 3 years of administrative and startup fees for you as a tax credit. And then there's also an employer match credit as well, where the taxpayers are going to help out with the cost of an employer match.
Yeah. How about that?
So essentially, for starting a plan, your startup costs and all of that, you're going to be, is it an unlimited tax credit or is it up to a certain limit?
The limit's up to $5,000,
Okay.
and you have to have, it can't be what we would call a solo 401k. So if you're the only employee of your business as an employer, it doesn't really apply to you. But if you have an employee that's what's called non-highly compensated, you can take advantage of the credit.
Yeah, so you get a tax credit on your startup costs, which if you're doing a PEP, that would get you all the way essentially for most folks. And then the other cost, quote unquote, for your small business of starting a plan is, I need to offer a match. How expensive is that going to be? I've done that math with people where they say, how much do you think people are going to contribute? How much will the math be? Blah, blah, blah. And yeah, that's a consideration for sure. And however, for the first 3 years, is that right? Through the Secure Act 2.0, you get a tax credit to help offset and help pay for that company match that you're offering to your employees. I would have said we would never see something like that, and here we are.
Yeah, and for the employer credit, it's actually the first 5 years.
First 5 years. Gosh, even better. So that Corey's saying, those are tax credits, and that's fantastic. And yet at the same time, it means, it's a burden on taxpayers, but whatever.
Right. And this has already been said as well, but just a reminder, you're talking about 50 employees or less.
Got it.
To fully qualify.
Fully get it, yes.
Yeah.
Got it.
Yeah.
All right. Second major challenge that every small business, every business faces with their retirement plan is taxes. Corey, so let's talk. What are the challenges with taxes?
Yeah, so really this just comes down to the blocking and tackling of how is your 401k plan designed. Are you allowing for a pre-tax contribution and a Roth contribution from your employees? As an owner, how much are you going to be able to use this benefit to help with your tax situation?
I think as a participant, so as we're doing financial planning for individuals, one of the most frustrating parts, yes, you trying to craft a great investment portfolio, not having all the pieces, but the other one is saying, okay, yeah, let's contribute the maximum amount. In this year, that's $22,500 in your situation. Let's contribute all of that. And then you look and they can only get 10 grand in because it's not a safe harbor. They're not able to do the full IRS limit. They're limited because of what the average employee is contributing for that plan. And it's just terribly frustrating. And so designing your plan in such a way that everyone and anyone is able to contribute up to the IRS limit, to me, it's significantly important. And if there's no Roth option, that's terribly frustrating as well.
Yeah, and Mike, you just mentioned the safe harbor. So in essence, the safe harbor, to oversimplify that means that anyone can put any amount into the plan. A lot of times there's limitations. If you're considered highly comped if you have some ownership in the company, or if you're above a certain wage limit. So this is where the highly comped folks and they've experienced this. If they didn't have a safe harbor plan, they're getting a check back in February because the money's getting kicked out of the plan. And so it's kind of a bummer. And so if you said, well, what would it take to have a safe harbor match? It's 3.5%, and you typically it had been 4, and then Corey found this way that it can be 3.5, and it's a better deal. It's a better deal for everyone, in my humble opinion. So this is where, as an employer, I want to look and say, okay, should I match 3.5 or 4%? The nice thing is, if I'm doing that and the employee is doing 5% to capture or 6% to capture that whole match, they're getting close to 10% into the plan on an annual basis, and it's pretty amazing how quickly that piles up over time.
Yeah.
So, but to get to your point, Mike, about the tax situation, we've seen as we've gone out, and if you're listening and you're a participant and you're curious about this, we're doing a show on the 5 decisions that you need to make as a participant. But we've seen where people who are paying no federal income taxes are putting pre-tax money into a plan. So this is where it gets really important to have a plan that's rich in benefits and options, to make sure that if I don't pay any federal taxes, I'm not accruing a federal tax liability by putting money pre-tax into a retirement plan.
There's also Secure Act 2.0, lots of changes with a different tiering structure with catch-up contributions, but then also a mandate that catch-ups for some people would need to go Roth. So you got to make sure you've got that feature. What are the other challenges businesses face with their 401k? How can you overcome them? We've got that and more coming up on the Wise Money Show with Korhorn Financial Group. I can't believe you slurped your coffee.
Did I slurp it?
I've never heard Kevin Korhorn slurp his coffee.
Oh, my word. That is so,
It was.
Oh, see, I only do that to irritate Lori. Because I did it one time on accident, and I realized how much it bothered her. And I don't know why that brings me such delight to bother my wife, but the same reason it brings me delight to bother everyone else in the world.
So Kevin has
sensory issues,
audible issues, where if someone's clicking a pen or I don't know. You know all of them, right?
I do. Cracking your knuckles, taking the whiteboard pen top on and off.
Yeah.
I can go on down the line, because when that happens, that's all I can hear.
So when we were first starting the show, of course, we're still trying to get good at this. But we certainly were trying really hard at the beginning. And I would have a pen. I would hold a pen in my hand, and I'd sort of pound it on the table as this nervous tick to help me. And that it didn't last long. It was either the pen stayed and I lost a friend, or I had to give up the pen. So, all right.
Okay, but dude, we didn't finish though the theology of cost.
I can't pull it out of you guys. You guys have to just run with it.
I know.
There's a little bit
I
of
was
pause
trying.
and looking like,
no, I was
Mike,
trying
what are
because
we doing?
I was trying, but really to me, if we get a chance, so let's get into it. If we get a chance to circle back to it, otherwise it'll just be bonus content here, because what I would want to say is, if to the extent that you can, when it makes sense, and when if you had a startup plan, get the government cheese to cover as much as it can. When that burns off, 3 years, 5 years, I mean, this stuff's so stinking complicated anymore. Mm-hmm. Even there's no way a caveman could do this. So, and this is where we need Corey and his team. But once that burns off, you can switch those costs to the employee. And again, my theology is, hey, if you're putting in is it 6% for
6% for the.
if you're putting in 6%, and as the employer employer, I'm putting in 3%, 3.5%. If I'm putting in 3.5%, what is it? Maybe 0.5% goes towards covering the cost. It's not much of that money.
The thought, just so you don't, cancel culture Kevin here, is as soon as the business falls on hard times, which isn't I wonder if. No. The economy and businesses, they move in cycles. Mm-hmm. And so when that happens, you as the participant, don't want your 401k to all of a sudden be dropped because, hey, we can't afford it. This is an easy one. We've got to cut it. Okay. Everyone's on a recession, unemployment rate skyrocketing. We are going to cut our 401k because we're not going to lose employees since we don't need this benefit anymore. You don't want that. And as a small business, you don't want to have to cut that benefit because then your best employees will be looking elsewhere. So I get it. No one wants to pay the cost. No one does. The business doesn't want to. Employees don't want to. But the philosophy isn't just that Kevin saying, well, I don't think the business should do it. No. It's to protect the plan so that it stays a benefit for you. Because you could even go a little bit deeper down that rabbit hole and say, though during a time when your business is likely facing some cyclical challenges, is the exact time you probably should be investing. Right. So you're gonna that contribution is even more important. So we'll see if we get there.
Okay, because we saw in 2008 and 9, Ford Motor Company stopped their match. I mean, you think that's unbelievable? Did you guys know that General Motors filed for bankruptcy?
Wow,
it's unbelievable. All this stuff. So you're like, that would never happen.
All right. Earlier this year, there were runs on banks. What? Like the Great Depression?
Oh my word!
All right.
What are they going to come up with next?
Third segment. Okay. So I have no idea if there's any more with taxes. In-plan Roth conversion?
We could hit on that and, as a tool, a profit sharing when it makes sense.
Mm-hmm. All right. So let's hit that and then get over to legal risk.
Oh, and there's a bunch of other stuff, too. I'll try. As it comes, it's like I almost feel like I need to just interrupt you.
Just know that I'm not thinking of those things that we haven't said yet.
Yeah.
To say, hey, what about this? Nope.
Yep.
You just
got to. You're good.
We're
good. Yep. Corey's got it. Corey, rise up.
All right, here we go. One of the big benefits of having a 401k is the tax planning that's available to you as a participant, business owner, and you want to leverage that. Make sure that your plan design is structured so that it is a huge tax benefit. We're helping overcome challenges to your retirement plan and more. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name's Mike Bernard. With me in the KFG studios, Kevin Korhorn, special guest Corey Johnson. Every episode of the Wise Money Show, as well as a lot of other content, is on the YouTube channel. Go check it out. Go to YouTube, search the Wise Money Show. Subscribe to it there. Turn on notifications so you're made aware every time we drop new content, which is all throughout the work week. And leave comments there, questions as well. We appreciate it. We're talking about your retirement plan, whether you're just, you're using it at work, or you manage or run your business, or you own a business. What are the major challenges everyone faces with their retirement plan? And thankfully, there's some laws that have helped change that and help you overcome these challenges, and as well as working with the right individuals who can overcome these challenges too. Still on the second one here, taxes, a couple other things that we need to hit on to help you overcome that burden, that challenge.
Yeah, we've already talked about how much an employee can put into the plan, whether that's pre-tax or Roth. We talked about an employer match, but there's actually a third source that can be a contribution to the plan, and that's a profit-sharing contribution, which I think at the end of the year, if the company says, hey, we've had a really good year and we want to reward employees for their hard work, you can have a discretionary profit sharing where you say, hey, we're going to put in X amount of dollars and it's going to be allocated to certain employees.
Proportionate to certain employees. There's a little bit of creativity you have there, but why would we bring this up under taxes? Well, if you're a small business owner, we talked about this recently on a show, that you're a small business, you are aware of the tax burden that you're going to face on these profits, and then on a whim, you just say, okay, we need to buy something. Let's buy something because we need to reduce our taxable income, when in fact it doesn't, because it's a capital expense or it's something that you didn't need. Another way of doing tax planning is saying, well, should we do a discretionary profit share contribution? And that's, it's a fantastic option.
Yeah. You get to the end of the year, and most people would say they want cash money. Who said that?
I have no idea.
So I think Randy Moss, but anyway, I could be wrong. So, but they'd rather have the cash in their hands to go buy a big screen TV or fill in the blank. That's way more practical for today. But if you said, what is the benefit? There's a benefit to an employer putting a chunk of money into the plan. It gets dispersed, and you can segregate your employees. You can segregate them by age. You can segregate them by job category. You can segregate them by a number of different things that allows, even though you're not putting an equal, say, percentage, you might in each across the board, in each employee's account.
So this is one of the reasons why you need to be working with a qualified and competent retirement plan advisor.
Yeah.
Last thing with taxes is we talk a lot on the show about doing Roth conversions, and your 401k plan, it would be helpful to have in-plan Roth conversions where you can, because if you've heard us talk about Roth conversion and say, well, I don't have an IRA or I don't, so I guess that doesn't apply to me. If you've got a 401k and you've made pre-tax contributions, having a feature where you can do in-plan Roth conversions allow you to make that Roth conversion within your 401k plan. We're not going to get into all the details there. You've got to figure out, well, how are you going to pay the taxes on that and make sure you measure twice, cut once. But that's another feature. Third big challenge that all small businesses, all businesses face with their retirement plan are the legal risks. So how can you help overcome that? What are those risks, Corey, and then how can you overcome them?
And this is probably the least known risk to business owners out there, because you think, hey, I just have a retirement plan. I'm just offering it, and there's not a whole lot of risk. But if we think back to how retirement plans used to run, I'll just use the Studebaker company, which was right here in South Bend, Indiana. There was some borrowing from that plan to help the business go through some rough times. And there's nothing illegal about them doing that at the time, but we all know that Studebaker went out of business. So that triggered President Ford on Labor Day of 1974 to enact the Employee Retirement Income Security Act, also known as ERISA. That's like the main governing law that helps regulate retirement plans. And out of that, you have to, in a retirement plan, you have to name a fiduciary of the plan. Okay, so you can either delegate that, or if you don't delegate it, it reverts back to the business owner, the plan sponsor. Okay, and that responsibility of that fiduciary is to monitor all the transactions inside of the retirement plan.
Yeah, and so think in terms when you think of fiduciary, because there are on different sides of the business. As a certified financial planner, the F word is a big deal for us because we have to put our client, by law, we have to put our client's interests ahead of ours. So we are fiduciaries. If your plan doesn't name a specific fiduciary, so getting a little jargon here, 402A named fiduciary. If you don't have a named fiduciary, as Corey said, the plan sponsor is the fiduciary, and that's a civil issue. It's not covered by your D&O insurance, and it's not. I'm not saying this to try and be scary, but I'm saying, look, and it's possible. I'm just going to say it's not probable that you're going to end up in some sort of a lawsuit or a class action lawsuit or some big issue. But we've seen where stuff can get really hairy and be incredibly expensive to fix it, because most of these problems can get fixed and no one gets in huge trouble. But the easiest way to solve that problem is just not get there in the first place.
So here, just quick to back up on this.
Yeah.
You're really good at making widgets. You're running your business. You're really good at it, and all of your energy, mental energy, is in how to lead and run and your business. Then you're saying, well, I need to have a 401k. That's not really my bailiwick. I don't know all the details there, but I guess I need to do it. And then you find out, oh, wait, and doing it actually brings on a whole nother level of risk on my shoulders. Why? No, I don't want that. I guess I need this 401k, but I don't want all this risk because I don't even know what I'm doing. I don't know what I don't know. And yet I'm exposed to more liability, no thanks. So if that's you as a business owner, you don't need to be that fiduciary. I guess that's the point. You don't need to be that fiduciary. You can have a named fiduciary, naming someone else, and therefore offer the plan, have all the benefits and all that, but delegate that responsibility to a third party, someone else who is comfortable bearing that risk because they know the rules. And this is their business.
It's all they do.
Yeah.
It's all they do. I had a great example. This guy had his Bobcat or whatever it was stuck, and he finally called the tow truck guy, and the tow truck guy came out and got it out in a half hour and charged him $200. And the guy was like, I can't believe it. And the tow truck driver said, no, now he's going to complain about my price. And he said, no. He said, I took 2 days off work to try and get this thing unstuck, and I still couldn't get it unstuck, and you got it out in a half hour. It's because tow truck drivers get stuff unstuck. It's what they do.
Yeah.
And so this is a tow truck driver who also said, hey, I own a towing company, and I'm a tow truck driver. Therefore, I'm not going to manage my own finances.
Yeah.
And he doesn't even cut his own hair. So I mean, this is where you say if it's not something you're good at and something that you do on a regular basis, you might want to have a professional service provider doing it. And just as we're wrapping up on the fiduciary thing, think 3 layers of fiduciary. So you want a named fiduciary. This is the person that will step in on your behalf. You wanted to. That's a 402A. An administrative fiduciary, so it's a 316, and then an investment fiduciary. You can be a 321 or a 338. Our preference is 338.
That is not going to be on the quiz at the end of the show. Hey, what are these numbers? No, I'm just kidding. It's hard to follow. But there again, this is why you want to work with a retirement plan advisor who can help you kind of navigate this stuff. And if your retirement plan advisor just sits there and throws these numbers at you and they try to make it sound really complicated, but they're not leading you, they're not educating you, you've got the wrong one, okay? Your retirement plan advisor should be educating you and helping you easily understand all these rules and what your options and choices are, and then guide you through those. All right, so we've got the 4th and 5th major challenges. To me, these are the most important. We're going to hit that more coming up on the Wise Money Show with Korhorn Financial Group. All right, we got to run.
Are we going to 4?
4th.
Okay, and we have to do
employee satisfaction and wellness and investment lineup. The only 2 that I understand about on this whole thing.
So I want to make sure that we hit, because financial wellness is, one, it has to be, I like to say, comprehensive, has to be personalized, has to be ongoing. It's not just an advisor coming out one time and saying, hey, here's your 401k, sign up for it. But then also, we met with the company recently where their big sticking point in terms of employee engagement was, how do you fit in culturally as an advisor with our base of employees?
Love it. So that was your practice. You're going to say that when we get on here.
Yeah, great. That's awesome. And you know what? We pulled up in a buggy. And they said, you are our man.
Nice. Okay. Here we go. 4th segment. Thanks for being here. This is the Wise Money Show with Korhorn Financial Group. My name is Mike Bernard. With me in the KFT studios, Kevin Korhorn, special guest Corey Johnson. Stay up to date on all Wise Money content. Find us online, wisemoneyshow.com. Then all over social media, wherever you're at, we are there as well. Search the Wise Money Show. We're helping those of you with a retirement plan today. There's 5 major challenges everyone faces with their retirement plan. What are they? How can you overcome them? And many of them, guys, can be overcome by working with the right team of professionals. That's why Corey is here on the show. He's an expert, and why we're grateful for he and his team and Kim and everything to be serving the small business owners in our community. Because the retirement plan space, 401ks, that sort of thing, it's gotten more confusing. It's gotten more, I don't know, complicated. Oh, but it's gotten better, guys. Wouldn't you say? I mean, some of the normally I can't give Congress a lot of credit here. As they make changes, it's like, oh gosh, here we go again. Now these changes, if you understand them, if you implement them, it's gotten better.
Yes.
It's gotten better.
Yep.
But it is more complicated. You need the right team working with you. So we're hitting the 5 major challenges every business faces with their 401k. Now, 4 and 5 here, to me, again, just thinking more from personal financial planning, these are, in my opinion, the most important, but there's still challenges that need to be overcome. This 4th challenge or frustration is employee satisfaction and employee financial wellness. So what's that challenge and how do you overcome it?
Well, let's actually break that down to the differences between the two, because financial wellness, in our opinion, as CFPs, it has to be comprehensive. It's not just talking about, hey, the 401k contribute more, right? There's tax planning, there's estate planning, there's investment planning, all tied into that. So the education has to be comprehensive, has to be personalized, okay, and it has to be ongoing. It's not just one visit out to the company saying, hey, here's your 401k, sign the piece of paper, we'll see you maybe some other time. But then there's also the employee satisfaction piece of it, which the education is a piece of that, but how is your advisor engaging your employees? Are they a cultural fit with your employees? Are they showing up in a 3-piece suit when you're a blue-collar work crew, or are they dressed how your employees would dress?
Mm-hmm. Do they speak the same language? Are they from this, are they on the same side of the table, I guess?
Are they relatable?
Yeah.
Because
yes.
the cultural fit, we've actually come in after that guy that was wearing the suit, and it just it didn't fit. It didn't work when you got guys.
The suit didn't fit?
The suit didn't fit, and it didn't fit culturally because the guys with steel-toed boots and hard hats, that meant something to them. I'm sure.
Yeah, I mean, what's worse than, hey, we're trying to explain this really complicated stuff that you don't really understand. You know, you want to be able to retire and maybe save up some dollars, but you're also aware of all the obstacles. And not only that, not only is it just a completely different language, there's someone that's not dressed like you, that's not talking like you, that seems like they're not connected with you up there trying to explain it. Oh,
Right.
my goodness. No, thank you.
Yeah.
There's not going to be engagement there.
Yeah, and I would say with that, how available is the advisor on your plan? Are they willing to call you back within, a couple hours if they're busy, or what is their policy on that?
Yeah.
Because you don't want you don't want to hear from your employees of the advisor that they call and they never get a call back.
Internally, and the Wise Money Show is about financial planning. It's about helping you take the right approach to your finances and have an awareness for the different creative ways to tackle or achieve a financial goal. This is not an infomercial. Yet I would tell you, internally, one of our measurables, one of the ways that we grade ourselves is for employees. Well, what percentage are contributing? Because that's an objective sign of how engaged are they. Because if it's someone speaking a different language that looks like they're from a different planet talking to them, how likely is that are the employees going to be to sign up for the 401k? Not at all. Not at all, right? And so that's one of the ways that we measure our effectiveness as we're serving small businesses. How many what percentage of the team is contributing, and it's a large percentage. And as we get out and do financial wellness stuff, how much engagement is there? How much interaction? And I don't know. It's a lot of fun. So we love it. All right, the 5th major challenge, I mentioned this up front, is one of my biggest gripes as a CFP working with employees trying to get the most out of a plan, and that frustration is both on the employer and on the employee, and that is having a strong investment lineup, investment choices. Now, here's why I would tell you it's a frustration. There's been all sorts of studies, I think, used too much. And that is, if you have a lot of investment choices within your 401k, people are less likely to contribute. Therefore, you need to have a very small investment lineup, and you need to have a bunch of target date funds. I absolutely cannot stand that. I think that is malarkey.
Yep.
I absolutely do. And so I do get that it can be overwhelming. If you've got a plan that has 500 investment choices, I definitely get that. It doesn't mean you should have 4.
Right. No, and it is it's baloney because we have actually proven that wrong. We have 401ks with 60 different fund choices, And if you sit down, because when people say, well, should I use a target date fund or should I make individual selections? If you're working with an investment professional, I would encourage you to, and you've got more than a couple $1,000s in the plan, I'd encourage you to pick your own, set up the rebalance on a systematic basis, and do that.
Yeah, I'd say the amount of funds inside of a 401k fund lineup is really an effect. The cause of that is business owners don't want to have to make those changes and monitor the fund lineup. They're likely not delegating that out to a third party. And we talked just really briefly about what a 338 fiduciary is. Like that is the cause that makes that effect of a small fund lineup.
Right, and the HR manager doesn't want people coming in his office or her office or whomever's office and saying, hey, what should I do? How should I invest my money?
Yeah.
So this is where you really want to get that burden and that liability off of the people on the team at work and have a financial advisor do that with your employees.
Corey, I think you're spot on that the investment lineup, having it be robust, having it be skinny, or having it be, 300 is really an effect. The cause is the individuals that are in charge of the plan sponsors. It's, I have no idea, so therefore we'll just do a small amount, something like that. I'd rather have the right education, the right guidance, provide the right amount of investment choices in the right categories, right? And then on top of that, be able to educate and communicate that to employees on an ongoing and regular basis. Because I've often talked about the big flaw with 401k investment choices, and that is you as a participant every quarter or every so often, you log into your 401k, you look at your investment lineup, the investments that have done well over the previous 3 months, those are the good funds, quote unquote. The investments that have done poorly over the previous 3 months are the bad ones, and you just simply switch and do the good ones and get rid of the bad ones. Guys, that's a terrible way to invest. It's a terrible way to invest. Even worse, though, or to make it even worse, is if you only have 3 large cap U.S. funds, 1 small cap fund, 1 international fund, and 1 bond fund in your 401k, and then a bunch of target date funds. That pretty much sums it up. Two large cap U.S. funds, 1 small cap, 1 international, and then a bond fund, and then target date. That's almost like the 401k playbook. And it's terrible.
Yeah.
It's terrible. Yeah. There's no mid cap, there's no emerging markets, there's no real estate. You should have a couple choices. You should have an index option in each of those as well. You can tell I get fired up by this.
Yeah. And that's you say the index, that's the active versus passive.
Yeah.
And it used to be there was a big deal about looking at all these active funds and picking active fund managers, and really the 401k is set up to be a passive investment option, and by doing the passive strategy, it's lower cost.
Here's what's not passive. This is the theme of the entire show. What's not passive is I don't understand the 401k. It's too expensive. I'm not going to offer one. Nope, can't do that anymore. I think, Corey, you're absolutely right. This is a must-have. And the other thing that's not passive is, well, okay, I started it and now it'll just run itself, or I don't need to attend to it. You need the right team of financial professionals, retirement plan advisors that can help you get the right plan and overcome all these burdens and serve you on an ongoing basis. All right, that's all the time we have for today. On behalf of Kevin Korhorn, Corey, the rest of us at Korhorn Financial Group, have a great weekend. We'll see you next Saturday for the Wise Money Show with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management, LLC. Doing business as Korhorn Financial Group. KFG Wealth Management, LLC and Silver Oak Securities Incorporated companies are unaffiliated.